It is January 2023, and I'm joined once again by our seasoned investor and trader, Doc Holliday. Doc, it's freezing cold here in the UK. I gather it's balmy and sunny, and you're in t-shirt and shorts there in Cyprus.
I am indeed today, Al. It's been a cold week, but the good weather has returned, and yeah, the climate within the small cap stock market's warmed up a little bit as well. So what's not to like?
It certainly has. What's not to like, indeed. So yesterday I joined your small cap equities Twitter room. Was highly impressed. We sat and listened as a team, and we're very impressed by the exchange of information and the knowledge of investors on there. Very well attended, and obviously want to use our platform to help you bring this to the attention of a wider audience.
Yeah, look, I appreciate it. I mean, I've been blogging for many years. I was kind of blogging as a personal journal of my own as I made investments, mainly for some accountability, because as we know, the retail community can be quite harsh at times, and if you do drop a clanger, they know how to beat you with that stick, good and proper, and rightly so. Or rightly so in some cases. And you know, we started to go out and get more involved with podcasts, and you know, I've resorted back to putting out a podcast because I want everybody to feel included within the secondary market. But Twitter Spaces live Spaces is definitely a slightly more sophisticated environment where, you know, not only can we look for sort of thought-provoking ideas, but we can try and get, you know, as many people involved with both sharing, you know, personal aspects of their life, the emotional impact that the stock market can have on us, because the market is built by design to make us trade the wrong way often. And, you know, it's the point was made yesterday that, you know, your natural fiber will be telling you not to buy shares at the time that you should probably be looking to procure some. And, you know, the inner greed that we all have within us tells us that, you know, we'll try and squeeze a little bit more out of every trade, and then therefore we miss the sell opportunity. So we really have to go against our natural instincts at times, or we have to form new instincts. And, you know, this is all the kind of dialogue that we're going to have. So any of the listeners who are interested, it'll be Tuesday, 9:45. Hit me on Twitter and come and join us. And Al, it would be an absolute pleasure to host you and have you come and join and share some of your ideas as well, because I think we want to try and make this as positive an environment and community as best we can. Of
course, mate. No, we'll be delighted to do so next week. Of course, in our professional capacity with brand communications, we can listen in, but I will certainly join you through my own profile, and I'll enjoy you know, giving some ideas and input, and you know, hopefully some useful knowledge. But just to pick up on one of the stocks that was talked about and discussed yesterday, of course, Avacta, which is really it's really lit up the bulletin boards this week after the company announced, of course, the successful completion of fourth dose escalation for its tumor targeting precision technology. And of course, this is for targeting cancer tumors. And you know, Alistair Smith, who I've seen present before, and I believe you have too, Mike, just said it was extremely encouraging as they work towards realizing vision of chemotherapy without side effects. So what's your take on where Avacta are now, Mike?
Yeah, look, I mean, it was one of the darlings of the small cap or junior markets back in 2020. You know, they are a multifaceted business, so not only are they involved in looking at a variety of different pipelines and drugs and things like that, you know, within the cancer space, they were certainly one of these companies that was blazing the trail within the COVID environment. And I think, you know, the analytical work that was presented back then, I remember from Miles McNulty, I thought he did an absolutely fantastic job of flagging this up, by the way, really suggested that this wasn't just a one-trick pony, it was a multifaceted business, and that there were many different lines of opportunity within it. And, you know, what you're seeing now is more of those different aspects of the business start to service in a positive light. And, you know, the share price has moved up quite considerably, so it would be remiss not to sort of remind investors that nobody ever went broke taking a profit. But I'll be honest, I spoke to one of the guys that's notorious around the city, and you know, he said to me, I've I've got some shares in AVCT. I've thinned a few out today, but I really think it goes well and it goes better. And we're talking about a really notorious City guy here as well. So I was pretty shocked that they were holding shares in AVCT, but it's telling you now that the credibility of the business and the appeal is starting to sort of spread out, and it's getting into all different corners of the market. So yeah, highly encouraging, and great news today.
Absolutely, and Alistair Smith has really stuck to his guns with what they've been doing. He's not been deflected by the ups and downs of the share price. He's just gone on with the job, and that to me is always a great sign. And of course, we've seen similar outcomes for Hvivo, which of course was picked up in Investors Chronicle at the start of the year, and the spin-out company Poolbeg Pharma, which has also done very well.
Yeah, sure. I mean, I'm not surprised that it's been flagged up as one to watch for 2023. I mean, Cathal Friel's other company, Amrit Pharma, was just taken out, or the deal closed last week for $1.5 billion bucks. So, if people are looking at Hvivo and saying, well, now they've got all of these smart deals with governments and big pharma and a variety of other different sort of businesses. Yeah, I mean, now we're starting to see the trajectory that Hvivo could well follow, and that is a very positive line that Amrit Pharma went down. So yeah, really good. And Poolbeg Pharma was spun out. We've talked a lot about it, Al, since I've been doing these with you. When shares were quite considerably lower in both companies, and yeah, and as we know, you and I spoke quite a lot about these companies over recent times, and I think they were trading, considerably lower than they are today. But there's a solid story both with Hvivo and Poolbeg Pharma. I mean, Poolbeg is impregnated with cash. They've, their own assets, their own pipeline, and discovery is advancing, by its own merit. But these guys are pretty sharp operators, and I wouldn't be surprised to see that cash deployed in a sensible manner. And that gives a stepping stone now for these guys to see, where the target mark is, and that's Amrit at $1.5 billion. Can we supersede that with the next one? And there's Hvivo, and then I suppose the seed to sapling story in Poolbeg Pharma, very interesting. Not surprised that they've been flagged up in national press, and I believe that these will go on and perform particularly well. And so far, so good.
Indeed. So Mike, let's look at the rest of the markets and other stocks. Moving on to sort of energy and commodities. What else has caught your eye?
Look, I'm obviously a bit of a fan of Longboat Energy, but this is a pretty broad pick, really. We're looking at things like Afentra. I talked a lot about that when it was Sterling Energy and the guys went into AET. I think it was 14, 15p, shares suspended. They've come back. There was naturally, due to that suspension and the fact that it was considerably higher on its return, there was some profit taking. But we seem to have worked through that now, and the shares are at 29, 30p. It is a breakout point. It's traded between sort of the mid 20s, mid to low 20s, up to sort of high 20s, early 30s, and then it goes on that sort of move again, that cycle down. And we've seen it trade that way probably 2 or 3 times. But I would focus on that from a breakout perspective. But using that rationale of AET, solid management team, bit of cash, and extremely experienced. And then we go and look at things like Kistos PLC with Andrew Austin. And Longboat Energy has got, Hellhammer, an ex-reservoir specialist and engineer from Big Oil. He's an ex-BP, or is he Shell? I always get mistaken. He specialised in reservoir development and discovery around Norway and, of course, into the North Sea. They IPO'd at £1. They've had some positive discoveries. I think Discovery K being one of them. And they've had a few misses as well. And, what we find when companies do, sort of drop the ball here and there, it's all a part of that learning experience, learning about the field or the reservoir, whatever that might be. And it's all a part of growing as a startup business. But these guys raised a 10 million quid at £1, and it was done at the click of a finger and a thumb. So I'm pretty certain that should they need cash in the future, they'll do it in a respectable manner. They're certainly going to be conscientious that the shares are now 18, 19p. They were trading at 45p back in November. I just think, they really telegraphed early on. There was some positive news in the last couple of weeks, and the shares did rally up to 26p, and they've slipped back again. But they made it really clear at the end of the year what their intentions was, and that was to get 2 or 3 wells for this year. And there's just been a licensing round, and they've done a partnership with one of the big companies, which is 60% state owned. Very, very big, operators. They've got a partnership in their non-operational partnership. And they stated, we've got 2 or 3 wells that we think we'll be drilling for 2023, and we've got some discoveries that we're going to look to bring forward, bring on, develop, and monetize. And that comes via a way of production, or they sell that production off and they get capital from that and go out and do more development. But I think solid management team. They were behind Pharaoh Petroleum, which was taken out by DNO for about 600 million. And the same gang there are back here again with Longboat Energy. It came to market a few years ago at a quid. They're now 19p. I think they're going to double in 2023. When that happens, I can't say. I'm not that smart, but I've stuck a bit of my own cash behind it.
Excellent. Well, that's always what we like to hear, Mike. So moving on then, commodities. We were talking before we came on air about Cadence Minerals. Of course, they have their lithium investments, but they're very active with their flagship asset, which is, of course, the Amapa iron ore mine in Brazil. Shares currently come back from lows of around 9p this year up to 16p. Of course, they did a big raise last year at about 20p, but the Amapa iron ore project has just had its pre-feasibility study. Definitive feasibility study is underway. And of course, this is a working mine. It was owned by Anglo American in 2012 and valued by them at 600 million. So they've already shipped some of the ore at the port that's owned by the company. So this could be an absolutely huge asset for Cadence, which is still very modestly valued.
Yeah, I mean, look, it was a market and a commodity that. Yeah, I mean, look, iron ore was a commodity similar to coal. It was unloved, unwanted, wasn't considered particularly sexy, and a lot of these, very, very big projects were released for not a lot of money, and there just wasn't the market there for it. But fast forward 2, 3, 4 years, you're starting to see this both thermal coal, metallurgical coal, all coming into sort of the focus again, to use that word, and with that, iron ore. Production of steel, and now we're out of COVID, building and growing. All of these things go together like birds of a feather, and I think that's what we have to remember. So, iron ore the market fell out of love with it once upon a time. Back in the mind's eye now, back in focus. There's some huge projects that are sitting out there and presenting a great opportunity. And to see, Cadence go into Brazil and do a transaction like that doesn't surprise me. And people will say, well, if the asset was so good, why did they get it so cheaply? And I think what we have to remember is when markets take a slump, these big mining companies, they kind of pull the horns in, don't they? Or they tighten the belt and they focus on core projects. And perhaps this is one of those projects that just kind of fell over the side. And it's been a great opportunity for Cadence to go out and pick it up. And now we're seeing interest within that iron ore space and the coal space and a bunch of other commodity spaces which have been, like I say, pretty untapped and unloved for quite some time. It's now getting back into focus, and I can see that a company that's had an independent report come out giving it an asset. Sorry, for a company with an independent resource of 600 million quid. I suppose there's a lot on the table there, a hell of a lot, and yeah, I mean, I think we're going to see a lot of these commodities that have reached that fulcrum point, and there's going to be some real heavy rebounds, and we saw it last year with copper, and now it's iron ore, it's coal. We're hearing lots of people now talking about uranium. Do you remember uranium 10 years ago or 15 years ago was quite popular? Then nobody wanted to touch it with a barge pole. So it's all part of the cyclical nature of markets, and those that are fortuitous enough and savvy enough will pick up the right assets. And Cadence appear to be, under Mazario's stewardship, one of those companies that's taken a real swing at the bat at that one.
Sure. Well, I've been speaking to other people within the mining space, and there is genuine palpable excitement this year. We're seeing, companies that offer ESG consultancy, for instance, they're receiving absolutely unprecedented levels of inquiries from companies needing to get these projects squared away, because there is a real sense of anticipation for an upswing in the price of commodities, and of course that will bring all the prices of the smaller capitalized mining companies and explorers, and of course the big listed companies with it.
Yeah, no, I think you're right. It's funny because we talked about it earlier on, and it's often quite challenging for investors to see a commodity environment, and that's been absolutely decimating, to say, you know what, I'm going to have a go at that. And I would imagine that people felt the same way with with pharma or med tech or whatever it might have been before 2020, March of 2020. I bet there's a lot of people saying, well, I can see this becoming a problem in the future. I can see this, but when, what's the catalyst? What's the trigger? And then suddenly COVID happened. And, if you were making hand sanitizer, you 10x'd overnight. And the same will come here. What will be that trigger for the iron ore price to continue soaring, or the coal price, or whatever it might be, the copper price? And we can see, way down the line, there's going to be this renewable energy environment. And of course, these black, dirty fuels are not going to be wanted. But right now, we're in a world where there's so many sanctions and issues with Russia and Ukraine, and, access to power and all these other things are quite challenging. So we're going back, we've regressed by 10 or 20 years. And does that mean we're further away from ever getting that sort of greener future? I don't know. I think we look for these catalysts, we look for these events, and that's where we'll start to see changes happen. And for now, or right now, things have not gone the way that the vast majority thought. And of course, many people started the year this year thinking that the markets would be shocking. We're going into recession. It's all doom and gloom, and there'll be no good come of it. And we've just seen the FTSE hit something like 4-year highs levels, and we're seeing life back in the junior markets. Crazy.
Indeed. Well, let's look at another sector in the market, Doc. And of course, this is an area that has been absolutely ravaged really late last year, and it's taken a lot of companies with it. And one company that nearly went under but didn't quite was, of course, Argo Blockchain. I'm talking, of course, about blockchain and cryptocurrency, but Argo had a rescue package announced at the end of December. They've refinanced with one of their key mining assets in Texas. They've now sold that to an investor, and they still own the machines, but they've now cut their costs, and certainly the share price over the past few days has poked up a bit.
Again, those fortuitous enough to believe that there's life in the old dog have made a lot of money if you bought them at the bottom, and there's going to be people who've held these from much higher levels who are still smarting as a result of it. But I think, it's like that adage, isn't it? A rising tide will float all ships, and when we go the opposite direction, the tide goes out, we get to see who's got no swimming knickers on. But it's kind of one of those situations where I think when lithium and cobalt first got really sort of busy around the markets, you sort of started seeing companies just directing themselves, dropping all of the plans and ideas to go and try and get some shoddy, half-baked cobalt asset in West Africa or some difficult jurisdiction. And I think the same story happened with cryptocurrency. I think a lot of tokens that were offered, a lot of companies set up, a lot of bad ideas, made its way to market. Same with CBD, a lot of really bad ideas, poorly valued businesses come to market at the wrong price at the right time, and they managed to get those deals away. And unfortunately, when the market's gone against them, we've really found out who those losers are. And that's happened in a big way in crypto. Argo have managed to survive. They've still got interest there. They've clearly got people who've lost and made fortunes behind it, who are probably well on the hook to try and see this one survive. And, if they can get through the next 6 to 12 months, if they can get through the next 3 to 6 months, I think it's a totally different environment. And there's definitely going to be another move in crypto. There's definitely going to be another move within that space and sector. And whilst I'm not, that smart or smart enough to be able to find all of those golden opportunities, I definitely believe that there's going to be some interest within that space again. And Argo Blockchain were well positioned once upon a time. There was a hell of a lot of interest, a hell of a lot of money that came into it, and I'm sure now there's some of these liabilities that they've been looking down the track and going, how are we going to get over that hurdle, given we've now gone from A to C and our valuation is 80% less than it was 2 years ago. But you know what? I think if you've got the right people involved, and I think one of the things we have to look at, both as investors and whether we're running companies or you're just trying to get through life, if you look at the challenge ahead here and it seems impossible, your psyche is gonna force you to become an immediate defeatist. You have to look at a base at a time, a camp at a time, and just get there, recalibrate, go again. And I think that's the kind of energy that we've seen from the guys that were involved with that business. Whether that can be replicated remains to be seen. But yeah, I think there's definitely life in that sector. I think we're going to see a lot less companies, by the way. But then that would go for cobalt, CBD, and a whole bunch of other sectors. So yeah, I think we're going to see a lot less companies, but the ones that survive will do very, very well.
Absolutely, absolutely. Turning now finally to the leisure sector. There's a company that we were discussing the other day, Revolution Bars PLC. So this is a company that has a portfolio of some 90 premium pubs and bars trading under Revolution de Cuba and Peach Pub brands. Put out a trading update yesterday, and that trading update wasn't good, but it was they'd seen a lot of interest, but the performance of the company was hit primarily by the industrial action. So rail strikes have impacted on people's ability to stay in town, maybe go to the bars, drink, and all the rest of it. So their numbers have been impacted, but the share price has just fallen now to the point where we're here now at multi-year lows at 5.7p. Shares are down 76% on the year, and a company with a portfolio of 90 pubs is valued at just 17 million quid. So, sorry, 12 million quid. So, I mean, what would be your view here, Mike? What would be your ideas?
I'm not kind of run the rule over the financials, but if they can service the debt and they can survive, you'll do well to get behind it. And I remember going back to a little company called Escape Hunt, who were behind these escape rooms, and during COVID, it was like, well, the game's up. Nobody's going to be able to do this. It's against the law to do it due to COVID restrictions. It made it against the law to do anything that was enjoyable, including going to the bar and restaurant. And yeah, there's no life in it. And I remember talking to an old mate of mine, Steve Pearce, and Pearce went out and bought them, I think, at about 3 or 4p. Very clever, very shrewd. And fast forward a year or so, and shares are, I don't know, 15, 20p, and it was all good to go. And look, I think this is going to be the same story. I honestly do. It's all about being able to service the debt and survive. One thing that we know from our life during lockdown and restrictions is you couldn't get me out of my house fast enough into a bar and into a restaurant. We appreciate that environment so much more. And whilst there is an energy crisis, the cash crisis, there's all sorts of problems with people, being defeated by the inflationary impact of just day-to-day life. Bread, packet of carrots, and cigarettes is now, it's killing people in the pocket. But I don't care what people say to me. As soon as people can get back out and get enjoying themselves, and they've got budget, it will go into Revolution bars. It will go into escape rooms. It will go into enjoying themselves. Because honestly, once you've had your freedom taken away from you, and many people did, and they kind of went corroborated with government. It makes you appreciate it all so much more. So, assuming that, I don't think there's going to be a lack of participants. Whether there's a pricing issue, whether these guys have, I don't know, fallen behind the curve with appealing to what it is people are looking for today. I don't know. I can't answer that. I'm not that sort of trendy an individual. But maybe they've come out of touch somewhere along the way, or they've got the pricing wrong. I don't know. I can't answer that, Al. But what I can say is there won't be a shortage of people wanting to get into an environment where they can have a good time. It's just a blip on the map as far as I'm concerned. If we zoom out 4 or 5 years, we'll say, you know, was it that important? And the share price will show that little spike in the chart, and they'll go, what the hell was that? And you'll go back and you'll say, well, this was the event. But we've looked at this loads of times, haven't we? You look at something and you go, well, how's that 5-year low ever been 5p when we're now at 50? And you zoom out and you look at a map over 5 or 10 years and you go, what was that event? And it's almost, you can't even explain it. When we get 2, 3, 4, assuming again they can service the debt and survive, you get so far down the track and it'll be like, what on earth actually happened? And it becomes, you know, a bit of a non-event. And I saw it with, we talked about with Royal Mail, share price took a tanking because of the strike action. We've seen loads of other companies, you know, fall at you know, the nation deciding that strike action is the way to go. I'm sure if these nurses, doctors, fire all go on strike, there'll be listed companies that suffer at it. But mate, as soon as you zoom out and you look over that 5-year period, you say, well, what was that event? Yeah, there was civil action, there was unrest that year, and you know, and it becomes a non-event. And I think if you can see past it, Revolution, but Bars could well, you know, could well present yourself with a great opportunity.
Excellent, excellent. Well, Mike, it's been great talking with you once again. We're up to nearly half an hour now, so just over to you for the final word. What do you see as being key over the next few months?
I said this at the end of the last live that I did, and that is, you know, I remember listening to people say Audio Boom are going to be taken out for 30 quid. Shares were about 18 to 20. There was a lot of big names, a lot of noise around Mayfair, particularly around that part of the city. Everybody hobnobbing about thinking, you know, come Monday morning, we're going to have the bid and we're all going to be sort of, cock a hoop as a result of it. And you know what? It never happened. And it's been decimated since. And I'm not a big fan of Audio Boom. I don't actually trust the integrity of some of the people that are involved in the business, the big shareholders. I just don't like it. But it's off 85%. And what I would say is whether we can look at a company and we can say, on a breakdown, I think it's undervalued or overvalued. One of the things that's super important is structure, and it's how these businesses are put together. And, you know, should we have been hearing what we were hearing 3 months ago about these big takeover talks? No, it was getting bandied around Mayfair for fun and good measure. And the people that were involved in it, unfortunately, were within a stable where they were massively exposed to, you know, a lot of other companies that the same people were involved in, like Dev Clever, AAA, these types of businesses. And the only thing left listed and liquid was Audio Boom. So naturally, anybody that had got a bit of leverage or anything else was getting called, right? You know, you've got to settle these trades, you've got to do what you've got to do. And Audio Boom seems to be the sacrificial lamb. Now, I'm not suggesting that there's a long-term play here with Audio Boom. What I am suggesting is when you think about the mechanics behind why it got to where it is, it's highly plausible. And if it was worth 15, 20 quid 3 or 4 months ago, then it's arguably worth 5 or 10 today. So I'm not even going to talk about the merit and you know, the credibility of the actual product or the business or anything like that. All I'm going to say is, you know, when things seem too good to be true, they often are. And then if you can take a step back and look at it with a different set of eyes, when things have been, when you've been through an arduous time, you can often find some nuggets of opportunity. So I'm not going to get too excited now, but I truly believe that at some point we're going to see a couple of these little companies that have been hammered because there's distressed situations, or, you know, there's exterior or external issues that are really no fault of the business in question, and then we'll start to see opportunities grow from that. And I'm sure people will say, if the shares are trading at 6 quid next time we speak, they'll say he had the inside track. But look, for me, I just want to sort of say to people out there that might be listening to this, go out there and try and decompartmentalize what it is we're looking at, and try and, you know, leave as much of an emotional hat on the desk while you do so. And that would be my only message. And again, it's not about pushing or promoting Audio Boom. I think I spoke to them about 7 years ago. I've never had anything to do with them since. And there's no real, you know, I've not got a huge amount of stock or anything like that. So I'm not here with a massive agenda. I'm trying to find these specialist situations, you know, so we can highlight them in advance of it, a little bit like we did with Harland and Wolff. And then when those events unfold, it becomes a base case for people outside who are looking to actually get more involved and tune back in to listen to the next one that we do. And it becomes a little bit like what we're trying to do on a Tuesday. It becomes a forum where people not only can learn a little bit about the markets, but they can find some great thought-provoking ideas. And hopefully we can go some way to helping people on the merry journey and doing that.
Absolutely. Well, just touching on Harland Wolff there quickly, of course, there was an announcement earlier today about the fleet solid services contract. There was a big presentation at the Harland Wolff shipyard in Belfast today. The share price has leapt today on the back of that. It's coming off a bit now, but hugely exciting to see this progressing. And I know H&W are going to be making an announcement to the markets on the actual structure of that deal. So hugely exciting. But Mike, it's been great talking with you again. Look forward to catching up again next month, and I'll certainly be at the small company and equities platform with you next Tuesday. Meanwhile, Doc Holliday, Mike, many thanks for joining us today.
Absolute pleasure. Cheers, Al. Thanks for the time.